Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, November 13th. Hope you guys are having a great day so far. We do got one kind of important data to report from the economic calendar, and that is the CPI, or Consumer Price Index, for the month of October. September, there was no change in the CPI, and forecasts are calling for a 0.3% increase for the month of October, and it exceeded that to 0.4%. That brought our year-over-year number from 1.7% to 1.8%, so it increased 0.1%. Now let's take a look at the core CPI, which is basically the removal of food and energy, which are variables we cannot control. And this is what the Fed will really kind of look at, especially when in terms of the PC, that's our real inflation or core inflation, as what you'll hear, and that's personal consumption expenditure. So there's two different indexes here, and the PC seems to be the favored one by the Fed, but however, the CPI is also heavily weighted as well. We do got a 0.1% increase in September. Forecast was for 0.2%, and it did go up 0.2%. My apologies for the typo here, but this was supposed to be 0.2% here. It did increase, and however, it's year over year dropped. So it went from 2.4% down to 2.3%, which is obviously good news for bonds, which you'll see here in just a bit. Now, on the headline news, stocks are down a bit. It was a little disappointed by the lack of information they felt from President Trump's speech. They did hear that we could have a significant phase one coming up in agreement very soon. However, he didn't indicate as to when give any ETA when this might be, or when this may be rolled out, or really any more information. Basically, he just stated that this has to be a good decision for the American people and businesses, that we would benefit from it essentially. And but again, so there's a little bit of pessimism in there, because basically a partial or full, they're kind of wondering if things are going to actually develop. And it seems to be there's some sticking points that's still not quite there yet, and that's what's kind of being delayed. Also, they were disappointed not to hear anything more in regards to the tariffs that were supposed to be rolled out on the European cars. They thought maybe that might be announced, that they would postpone that date, and nothing was mentioned on it. So again, they were a little disappointed on that. And then to add fire to the fuel, this morning, Fed Chairman Jerome Powell will be meeting before Congress. And before he met with Congress, his statements for Congress were released, and basically indicated that he is not planning to cut any more rates. He feels that where we're currently located is perfect for where we are, and unless there's a severe deterioration in the market, he doesn't see any need to cut any more rates. So of course that kind of disappointed the markets, well, at least the equity markets. So some of that money is going into the bond market, which you'll see here. We're up about 14 basis points. We've been kind of this no man's land. We did improve a little bit through the day yesterday, as the information about his President Trump's disappointed investors, so the market kind of deteriorated a little bit and helped out bonds. And then today it kind of rolled up even further, so it brings us close to the 100-day moving average. So we will get better pricing today. We should see a little bit better pricing. I don't say like a dramatic, but at least maybe an eighth of point, 8% in the rate. We should see a little bit of improvement. Yields kind of broke below its Fibonacci here, as you can see here. It broke below it yesterday. We tried pushing it so far this morning, and so far we've been kind of sinking lower. We're down to about 1.88 right now, and just actually slightly lower than that, but right about 1.88 right at the moment if you round upwards. So that's perfect for those who are looking to refinance a buy. And speaking as such, if you guys are in California, I'd love to be able to talk with you guys. I am a mortgage planner with Pinnacle Home Loans. We have quite a variety of loan programs we can offer, and that can help with your planning needs. So many people may think one loan fits all, which is really the misconception out there. We can help you plan and help you get into a scenario. You let us know what you're looking to do. I've helped people from becoming real estate investors to looking at towards retirement, looking for college planning, basically looking at structuring your loan and into a situation where it can help you to save more money, or figure out how you can get into your future needs. So either to pay off your debt sooner, or different strategies we can utilize and put you in a safer position than just keep giving the money to the bank. Different strategies that may not put you in a safe position here. So, again, just go ahead and reach out. You can direct message me or go ahead and email me. Email may be the best one here. You can get my email address here. You guys have a great rest of your day. Thanks so much for watching. We will catch you guys tomorrow. Bye-bye.